As investors, it gets us really excited because it opens up potentially people being a little more open to investing in some of the companies we're big believers in.
I love the fact that race creates competition, competition creates ingenuity and growth.
And they listed here in New York because they were funded by U.S. private equity companies.
Right. Think of it. It was many years before Amazon made money. Hey, everybody, it's me, the Einstein on Wall Street here. From the balcony, look up in the sky, it's a bird, it's a plane. No, it's me talking to KraneShares. It's so exciting to revisit this place. There are no robots, even though I probably look like one, right? That's how we met the last time. We brought Koi onto the floor. In fact, we had a race. We danced together. It was incredibly exciting. But we're here to talk about something else. We're here to talk about leveraged ETFs, okay? Not any one in particular, although we're going to allude to it. But it's sort of an exciting new thing. Now, everybody knows that on the floor of the exchange, we've got 3,000 plus stocks, equities, right? In the beginning of time, right, the Dow Jones Industrial Average was the first sort of structured ETF in a way, right? It was 30 stocks. You've got individual stocks, and then you've got baskets of stocks. The Dow is a basket of 30 stocks that basically is by America. It's IBM, Triple M, UNH, Pfizer. Then you've got the S&P 500. When tech came into to be, right, they decided if you want exposure to the overall market, you needed to obviously have tech involved. So they put together a basket of 500 stocks. That became the S&P 500. There is the Russell, there is the MSCI, and then they created ETFs. So an ETF, just by definition, is basically a basket of stocks in a certain sector, so that if somebody, imagine I like the luxury sneaker business, right? And if I invest in Nike, and LeBron James does something silly, well, then Nike's going to go down, and then my investment goes down. But if I invest in a sector based on a basket of all these stocks that are in a sector, then it's less likely the volatility of the ETF per se, based on news and earnings and all the other things that make stocks go up and down, is muted, but basically because there's a number of stocks in the industry. 4 or 5 or 6 or 7 of the luxury retail sneaker companies may be doing well while one doesn't, then my investment isn't going to be as volatile. So that's a multi-stock ETF, and it's becoming a huge, exciting business, right? And they're being issued on a daily basis on the NASDAQ and on the NYSE. Right, they're giving young retail investors a chance to basically invest in baskets and sectors of stocks in a way that they never could before. You have to realize that if you're an avid investor, an avid trader, and you're really savvy and you've been in the business for a while, well, then you manage your own portfolio or you give your portfolio to someone else to manage. But if you are not as focused on this and you have another kind of a job and but you want exposure to the stock market, an ETF is an incredible opportunity and vehicle for you to make money in sectors that you might find exciting, because people like to invest in things they like. We are the grandest consumer generation in the world. We are super loyal consumers. And so when we see something we like and we know it, that's something that's familiar to us, and that's super exciting for us to invest in. Welcome.
Great to see you, Peter.
Your name for the group, please?
Brendan Ahern. I'm the Chief Investment Officer of KraneShares.
Of KraneShares. Okay, so let's talk for a minute. So that was sort of a backdrop on what ETFs are in general. We're here to talk about single stock traded ETFs. Can you give everybody a little breakdown on how that differentiates from multiple stock ETFs?
Yeah. Unlike a diversified basket, this is really a singular exposure to a name. Now, obviously, KraneShares, KWeb, our flagship ETF, our China Internet ETF, we're kind of known as a little bit of knowing China really well. And we've seen this re-rating, this bull market in Chinese equities that started in January of 2024.
Okay.
And it's been 2 steps forward, 1 step back, which higher highs, higher lows is an uptrend.
Fine.
But we really saw that a number of our companies are really undervalued. And we so believe in the prospects, and we can't predict the future, obviously.
Right, of course not.
That we wanted to provide that singular exposure to companies like Alibaba, Baidu, JD, and Pinduoduo.
Right.
And we actually are seeing really a lot of our thesis playing out. That you probably just saw how Waymo, Google's robo-taxi unit, valued at $110 billion.
Right, insane. Yeah.
Insane, right?
Yeah.
The number of rides they do annually, weekly, pretty much the same as Baidu's robo-taxi called Apollo Go. All of Baidu, the market cap is $50 billion.
Right.
So think about it. You have Baidu's version of Waymo is worth half
Right.
Now, Baidu does more than just robo-taxis.
Well,
they do
the
search.
Right.
They have a large language model.
Right.
Their version, they call it Ernie Bot. You get all of that for free.
Right.
As well as they're really the Google of China. There's traditional
they are the Google of
search
China.
business.
Right. That's what everybody thinks of it as. So let's talk excitingly for a minute. You can come through. Go, go, go. Whoa!
Yeah, no worries.
That's some leverage for you right there. Okay, so let's go back for a minute because I've been trading here for a long time, and we didn't trade Chinese stocks. You can go through. We don't trade Chinese stocks here for a long time, and then they started coming in, and then we saw the SPAC phenomenon came along, and then we noticed that a lot of these Chinese education companies came in under the SPAC thing because listing here is not an easy thing to do, as you know. You've gone through that process more than once, right? And in order to list, you have to have certain valuations, capitalization, and all those things. There are rules.
Yes.
And that differentiates us from NASDAQ and the NYSE and all those other things, the NYSE American, right? Obviously, most of the tech names that came along listed on NASDAQ because they didn't have at the time. Amazon, think of it. It was many, many years before Amazon made money.
Yes.
Right? They did have revenues, and NASDAQ accepted those revenues, but they didn't have enough profits to be able to list here, right? That valuation. And so that's what created it. So, look, at the end of the day, the playing field is all fine. We know that we differentiate ourselves from NASDAQ for a number of reasons, but one of them is market makers. And I think you've seen a little bit of both of those things play out. And a market maker is somebody who creates a smooth and active market, injects liquidity into the market. They're flying the plane, and they're a very valuable thing, especially in this wild, incredible, electronic market. Okay. Chinese stocks, though, I mean, obviously we have as a nation, we have a contentious relationship with China. Their stocks, we've had for the longest, depending on who's in office, right? You've been allowed to trade their stocks. You haven't been allowed to trade their stocks. They're our friends. They're not our friends. I'm taking my ball. I'm leaving the playground. We know that that's been a wild and crazy ride. So, however, those look, China's one of the greatest economies in the world. But, look, probably one, two, three. I mean, you could name them, and they're surely in the top three, no question about it, in everything, right? We, for the first time, the U.S. is leading, I think, in AI and in tech, and there's always that fight. But it's always it's a race.
Yes.
And who wins the race? I love the fact that race creates competition. Competition creates ingenuity and growth, and that's how economies grow, and that's how we get all these amazing companies and this great stuff. And look, that's the amazing thing. We've seen it in AI, we've seen it with chips, we've seen it, and then we have, look, every administration has a different relationship with China, and we've seen that this one has been a little more contentious when it comes to the tariffs and all that stuff. I mean, I can go hard back. I always talk about this. I have a photographic memory. And so I have this, I can remember some of the most curious things. I did it today with my interview, with my talk at my high school, which was 50 years ago. That doesn't age me at all. I mean, I can remember things that happened 50 years ago.
I'm with you.
It's amazing. And literally, the first time that Mr. Trump this was Trump 1.0, Davos 1.0. It was the first time he ever mentioned China and tariffs in the same sentence. The market sold off. It was 11 o'clock on a Tuesday. Market sold off 1,400 points, putting us into bear territory. By the end of the day, as we know, Mr. Trump loves in his negotiating tactics, throws out a big swath and then pulls it back. We did it with Greenland. We've done it with
the
other
art of the
things.
deal.
The art of the deal. By the end of the day, we had rebounded 2,800 points and closed up in bull territory. Never happened. Something that used to take generations to happen happened over lunch. All that being said is that China stocks are viable. They're incredible. They're part of the economic growth of the world. The world, the more the world gets diverse, the more the world is the same, right? And the world is actually, look, our relationship with China, and look, Chinese stocks here have think of Baidu, right? I mean, think of Alibaba. One of my favorite moments here. I've traded more IPOs than anyone on earth, and one day for me it was incredibly exciting. Was the day Alibaba went public. Jack Ma and I spent the whole day together. We bonded by the fact that we were the smallest people in the room, and we were seeing each other face to face all day, and we had a fun chat over it. And the great story about Jack Ma is that he was turned down for a $5,000 loan 100 times before he became the $285 billion man. Exactly. So what a great story is that. So let's talk about it. So you guys are you the first to create a single stock leveraged ETF?
Focused on a China suite, yes. That single stocks you've seen most companies that have an expertise in the U.S., are focused on the U.S.
Right.
Are really the genetics, the DNA of the company. Actually, we're really built partly around Alibaba.
Right, you are.
You know, we listed KWeb a year before Alibaba went public, knowing
Really?
it could
Oh,
happen.
wow. Okay.
And they listed here in New York because they were funded by U.S. private equity companies,
right.
and they wanted a U.S. dollar exit. So yeah, Alibaba, you know, we're big believers.
So how many of them are there?
So right now we have 4.
Okay.
So we have Alibaba, Pinduoduo. So those are e-commerce companies.
Okay.
JD is an e-commerce,
Right.
as well as Baidu. So I think, you know, part of, we see this opportunity set because like yourself, we kind of have learned that Donald Trump, you know, he can create distractions.
Right.
This is part of the negotiation, but it's very clear President Trump is going to go to China in April.
Yeah, 100%.
And we already are starting to see potentially what are the deals that could be announced there, where could U.S. companies get more access into China? Could China buy more Boeing airplanes, soybeans, NVIDIA chips?
100.
You know, last week, Jensen Huang was in China.
Yeah.
I mean, he wasn't running around with an H200 for sale sign, but we know that in April, you're going to have potentially this trade truce evolve into something a little bigger. Doesn't mean that the U.S. isn't going to bring certain things back, right? We need medicine. We need the chips our military needs to be made here, steel. But, you know, some of this stuff that Walmart, Home Depot, some of these basic things are always going to be made there because it's made in China. They have over 1 billion people. There's 4 billion people in Asia. There's a huge local market. So again, there's certain things that we're going to bring back, and that's should be a priority. There's certain things that it's not necessary.
Correct.
But we think President Trump he has an ear to business leaders.
Absolutely.
And those corporate interests, if we think about Tesla, Apple, I mean, even ExxonMobil, 10% of their revenue comes out of China. So I think President Trump is attuned to those corporate interests. Obviously, he's got the interests of the welfare of all of us as well.
100%.
So it's a balancing act. But we think this president, maybe unlike the past administration, that corporate interest is going to play a role, which is why we see Trump going to China. You know, there's already talk about President Xi coming to the U.S., as well as you have the APAC conference is actually in Shenzhen, China this year. So we think that there's a pathway for a better diplomatic corporate relationship. That's a good thing for all of us. But as investors, it gets us really excited
100%.
because it opens up potentially people being a little more open to investing in some of the companies we're big believers in.
So I love that. So let's talk about the retail investor. One of the things that I track, right? We know that during COVID, prior to COVID, you needed to be an accredited investor to invest in this market. With Webull, Robinhood, and the other free trading apps, that democratized the whole investing and trading community. 50 million plus new traders came into the market. Most of them got their asses whooped, excuse my language, by the meme phenomenon and all that. But many of them have come back. And one of the things I do is I analyze. I have my ear to the grindstone in retail because we run. I run with my partner David Green a trading academy called Wall Street Global Trading Academy, where you have thousands, tens of thousands of young retail traders learning how to trade the market and the futures market. And so we know what they're looking for, and they're looking for new opportunities to trade and whatnot, and that's super exciting. What's exciting is they're always looking for some kind of an instrument to trade. And so we know that, look, you're talking about a leveraged ETF, right? One stock leveraged ETF is super exciting. What does that mean? That means that it's going to be more volatile than a single one, and there are singles, doubles, and triples, obviously. And so look, the young retail investor is coming to Wall Street through the gamification system, if you want to call it that. These are younger people, right, who I've never played a video game in my life. I have a 30-year-old son. He lives for video games, and it's helped him as he's now a trader for me, and he's trading, with my company. And so that ability for the volatility, for the excitement, for the adrenaline, that's what it's all about. And so for you guys to create that, and hopefully, look, we know that the retail community is now smart money, right? I through my analysis, it was the retail investors who were buying the market in February, March, and April of 25 when everyone else was selling, and most people would have thought, that's retail bailing because they got scared that the market was going down. No, it was not, and it was retail that was buying in November when the market got its clock cleaned. And so for you guys to present this, I find it so exciting because as they are looking for new investment and trading vehicles, right, you guys are presenting that to them. And I think they're going to be intrigued, first of all, by e-commerce as a sector. They're going to be excited about the leverage part of this thing, and they're going to be excited by the ETF thing. And so.
Well, it's kind of funny because, I mean, almost probably to the day, almost 25 years ago, I moved from New York to San Francisco to be part of being part of the exchange-traded fund industry. So I'm a big believer, one, in education and trying to give people as much information, good research, data, something obviously we really try to do at KraneShares on a daily basis. But I've also been part of this ETF industry, which is really, to your point, is about democratization, about leveling the playing field, giving people the same tools that institutions have enjoyed. And so I think, on the single stock levered, there were big believers. Obviously, there's risks involved. I think one thing that we've done is that we've started to give access to private companies in one of our ETFs. So AGIX is actually our USAI ETF, but we actually have a single exposure to both XAI and Anthropic in a publicly traded ETF. So this is where, through our relationships, we were able to invest directly with those companies last year. Obviously, those two companies have been in the news. Obviously, Anthropic, this SaaS-pocalypse, they're calling this, massive decline in software stocks because
as of down 52-week low it's as of 2 days ago.
That's driven by Anthropic has actually created a legal, AI that people are really, and we're seeing that with some of their. Could you replace some of these big software just with an AI agent? And so Anthropic expected to do between 18 to 25 billion in revenue this year. There's chatter that they might go public. At the same time, we also have exposure to XAI, which has actually been really in the news of late because Elon Musk is going to basically fold XAI, known for their Grok large language model,
into the SpaceX,
which is talking about an IPO.
Now they even talked about maybe merging Tesla into the IPO as well, which may be bigger than big. Imagine that, bigger than big.
So that's, I think, it's another one where for this democratization theme, that's something that we think AGIX is kind of a unique vehicle out there, and it's important that this is not an SPV. We're on the cap table for both of those companies.
So
it's
look,
a cool little fund.
Look, you're obviously on the cutting edge. The educational part is huge. At the end of the day, it's not about a get rich quick scheme. The retailers came in here with that game sensibility, and then they, as I said, they got their clocks clean. Those who came back realized that Wall Street was serious, but that if they were serious, Wall Street would meet them head to head. And so you guys are obviously on a cutting edge at every level here, going all the way back to 25 years ago and to now, are creating instruments for them, and then as the educational component is huge.
For sure.
At the end of the day, they are, look, I'm a firm believer that, I've been here for 137 years, so for one of the things that humbles me
you were here when it was under the buttonwood tree.
I went to I went to the inauguration of George Washington with Alexander Hamilton. He's buried across the street. I'm still here. So, but the bottom line is that now I lost my train of thought. But they are always looking for something. I am humbled by the fact that I am forever a student of this market. And the student is constant. The market is forever evolving.
For sure.
And the retail audience, they're just joining this party. Dan Ives always talks about, Dan Ives, the famous tech analyst. He and I have a show called Einstein and Ives, and we spend so much fun time together. He's the one who sort of illuminated me to all the insights into AI. He says, AI is a revolution. We're in the second inning of a 9-inning game that's going into extra innings. It's 8 p.m. in a party that's going to 4 a.m. You're presenting it that, we're still in the beginning stages of a revolution of young retail investors, of new products, of ETFs, of creating a product that has such a beautiful future to it, that gives people exposure to the market in a way that makes sense to them.
Yes.
And that's why I think it's probably going to be successful. This is a disclaimer. I'm not recommending anything. But it's been so great to talk to you.
Thank you, Peter. Great.
Look, we just spoke a little while ago. You guys are evolving so quickly. I probably won't be too long before we'll be talking again about the next iteration of KraneShares and what's coming.
We'll hold you to it, Peter.
I appreciate that.
Thank you.
The Einstein on Wall Street here. Check it out. That's all I got to say about that.